I always say to my wife, Tucano Gold's either the number 9 bus or the private jet. That today, just the mill would cost you $300 million to build that today. Yeah, the first couple of months, Stein, will be about 5,000 ounces a month as we do exactly that. We're reprocessing old stockpiles that are sitting right next to the ROM pad. Cash costs well below 1,000. You're looking at a picture there of a business that's going underground that could go for 50 years. So it just shows you the potential of a re-rate for us. I think we're going to be a $1 billion company next year. And who knows, maybe we can pay a really big dividend.
All right, today we're having a discussion with Jeremy Gray and Max.Beck from Tucano Gold. As early as November 2023, I personally invested in Tucano Gold because the project made a lot of sense to me back then. Now, fast forward to October 2024, the gold price is roughly 50% higher and Tucano is on the cusp of production. Tucano Gold expects to generate hundreds of millions of dollars a year in cash flows in a couple of years' time, is for now still private and therefore trading at potentially very attractive valuations. For you, that's what we'll try to figure out today. So Jeremy, welcome to the show. It's great to have you here. Before we talk about how people can actually reach out to Tucano and potentially participate in your placement, let's first start off with a short and sweet 30,000 feet overview of your business.
Yeah, thank you so much, Stein and Lars. Max and I are super happy to be on today's call. Tucano Gold is probably the largest gold operation in northern Brazil, in the state of Amapá. We bought it, as you said, 12 months ago when the price of gold was 50% lower, and we're restarting it right now as we speak. And it's a very highly cash generative business, and at these prices, it will make somewhere between 120 and 150 million US of clear profit next year, and our valuation for this round is just 60 million Canadian. So we're really excited, and it's a very long life business. It's a huge infrastructure of $500 million that's been built by the previous operators, and it couldn't be a better time to turn on a gold mine in Brazil. As I've said to you before, Stein, I think gold mining in Brazil is probably the most profitable industry in that country right now.
Excellent first overview, Jeremy. Thank you for that. And I promised it during the intro. Max, welcome as well. Perhaps you can shortly outline what raise you're currently doing, how people can get in touch with you, and who you actually are.
Yes, of course. My name is Max.Beck, as previously introduced. I joined Tucano about a month ago to head up their investor relations, and I've been working for the last 20 years in the mining space, running investment conferences and helping junior mining companies raise money to mainly at the sort of early stages of geology, never really at this stage, which is what makes this so exciting for me. We're looking to raise around about 5 million Canadian on this particular raise, and we're well on the way to doing that. Anybody who's interested in finding out more, we've certainly got the information to provide if you get in contact with us. And the best way to get in contact with us, of course, is through our website, which is tucanogold.com.
Excellent, Max. Thank you for that. Perhaps, Jeremy, you can start off with introducing Tucano Gold to the generalist investor who has seen the gold price shoot up, might want to participate in that move, is seeing this company potentially significantly undervalued compared to that gold price. What kind of infrastructure is in place? Can you outline what your planned specifications are, and what is kind of your production profile heading into the next couple of years?
Yeah, definitely, Stein. Look, Tucano is, I think, arguably the most advanced gold restart in the industry, and I'm talking about a mine that's ready to turn on. Most mines take 5 to 10 years to build. They cost $500 to $1 billion of capex. But this one's been on care and maintenance for 12 months. We've kept it in great condition. We've been waiting for the funds to come in. The market went a bit sideways earlier this year, but now, boy, oh boy, it's taking off. And we did make a call that gold's going to 4,500 by the end of next year. And I wouldn't be surprised if it's well over 3,000 by Christmas. The cash cost is around $1,200. So the margins at today's price are out of this world. And the payback on investments super fast. It comes with everything, Stein. It has its own airport, has 200-man camp with Netflix, has a gymnasium, amazing workshop facilities for 777 Caterpillars, 8 open pits, 3.5 million ton mill. That today, just the mill would cost you $300 million to build that today. So it's the beauty of buying big assets that have come out of bankruptcy, that have been restructured through the courts in Brazil with a clean balance sheet and just raring to go. I mean, we've got 120 staff on site, and I'm hoping by 3 months we'll have 800. and we'll be producing around 10,000 ounces a month. So if you think about today's price, that's sales of around 27 million a month.
Definitely, and perhaps we can dive into your current placement. I believe you have one open for $1.20 Canadian. You're trying to raise capital. What is that capital going to be used for, and how much do you need to get into production?
Yes, as Max said, we only need another 5 million Canadian. We have a super tight share structure of only 50 million shares out. We're doing this round at $1.20, which is a 60 million valuation relative to the replacement value of 500 million US. And that basically, it's very small things like ordering a few parts for the mill, buying the cyanide. The chemicals are currently sitting on the port at in Santana. I'm talking to the port for group at Maersk every day to get that released. It's just little things to get it started, and working capital to cover your electricity, your diesel, and all the things that come with that. So it's a very small number. We're that close to turning on. I've been saying that a little for a couple of months with you now, but we really are flying right now with this strong gold market.
Excellent, and perhaps we can dive into that quick return on investment. You already started hinting at it. Perhaps we can talk about what the initial mine plan is. I know you have a waste stockpile, let's say it, beside the plant. Perhaps you can talk about what the first couple of months should look like.
Yeah, the first couple of months, Stein, will be about 5,000 ounces a month as we do exactly that. We're we're reprocessing old stockpiles that are sitting right next to the ROM pad. There's about 30,000 ounces there. Cash costs well below 1,000. So that will generate probably 20 million of free cash flow. And then we'll go into the first pit, AB1. You've been to AB1, you and Lars, the big pit. There's about 140,000 ounces to mine there. And we have 7 other pits. We have about 600,000 ounces in the open pits that are left at least. And as we go underground in 2 years' time, we think that's at least 5 million ounces. In fact, the underground potential at Mina Tucano, we think, is arguably the number one undeveloped underground mine in Brazil, possibly top 3 in South America. So it's really big. It's a big beast. When you've got 10,000 ton a day mill, you're producing at least 300 ounces a day. You do the numbers. That's nearly 300 times today's price. It's nearly $1 million of sales a day. There's a beautiful chart there. Exactly that, Stein, where you can see that's a 7-kilometer system being drilled extensively over the last, 20 years. And you can see there it's all ending in mineralization. And we think you're looking at a picture there of a business that's going underground that could go for 50 years.
Yeah, and a bit of context for the viewers at home. That mine plan on the left in Urucum North, that underground mine plan, that was developed by the previous operator. They've invested a lot of money in that. Perhaps you can explain roughly what kind of investment they have made there and what the potential is. You already started outlining it, 5 million ounces across, but give a bit of detail behind this chart.
Yeah, that yellow circle there, Stein, and maybe you go to the next slide to give you more granularity to that. But that will show you the mine plan that was there you go, exactly. That mine plan was designed 2.5 years ago when gold was $1,650. There's been over 400 holes drilled into that underground system there. None of that's currently been mined. It's still a project. The drilling alone, they've invested 30 million plus just to do that drilling. A lot of 600-meter holes. They all ended in mineralization. And we think just that area there is going to probably give us 2 million ounces of underground potential on a system that is about 6 times longer than that from the previous slide. So it needs, we're not going to rush into underground mining just yet, but the beauty of it is it comes with a grade of 4.5 to 5 grams versus the open pit material that's about 1.2 to 1.5. So we think the cash cost of this underground business at today's market will be well below $1,000 an ounce.
All right, that is definitely an exciting future prospect. Like you said, this is a couple of years in the future. Perhaps we can talk a bit more shorter term than production profile. You already hinted at a couple 100,000 ounces in those open pits scattered over your project. What kind of all-in sustaining cost should investors model with for those ounces?
Yeah, it's a great question. We have modeled 1,400 all-in sustaining cost. But there's a very important variable in that, Stein, in that the Brazilian real is getting weaker by the day, and the weaker the real becomes, the lower our cost will be. I was looking, and maybe you can show this chart later, but I have strongly believed the Brazilian real is about to weaken materially over the next 3 to 6 months. It's been basing over for the last 4 years between 6 and 4.6. It's currently 5.7, and we're calling for the real to go to 7 to the dollar. We saw the same thing happen between 16 and 2020 before it had a major deval in 2020. And I just think the environment to mine gold in Brazil could never be better because the currency is in a weakening phase, which reduces your all-in sustaining cost. So it's just amazing combination of a strong gold price in US dollars and a very weak currency. Like we've not seen that ever before in the industry. It's quite unique, and why we think we're in a new golden era for gold mining generally, anyone outside of America.
Yeah, I think that's a very interesting parallel to some trends we are currently seeing in the market with Newmont, for example, recently on the 23rd releasing their earnings. Investors were too happy, 15% share price drop, and it wasn't because they really missed their guidance on production, it was because their cost had increased more than expected. And I guess having that weaker local currency while producing in US dollars, or at least in gold, which you can sell for US dollars, is a strong value proposition to be in.
Yeah. Look, I'm sure Newmont's share price will double between now and the next 12 months. But I think they are very dominated more, I think, in the US. Maybe 50% of their business is the US, so they don't get the benefit of the currency devaluation that we get in Brazil. So, that's fine. I'm sure it will. There are other mines outside of the US that are doing extremely well. But yeah, look, it's just an amazing nirvana. I'll give an example. Today's gold price, I think it's on the slides actually. There's a slide there that shows the history of the gold price in Brazil for us today at Mina Tucano, and also for the previous two operators. So when the first group turned up and built this business in 2013, they turned the mill on and they were getting around 3,000 reals an ounce. In a very good year, they got 4,000. The second guys came along. They had one good year in 2020 when they were getting 10,000 reals an ounce. Today, you can see there in the top right-hand side, we're now at 15,500, and yet the costs haven't changed dramatically at all. So we're basically getting 4 times more than what BDL was getting 10 years ago. And yet the costs are pretty much like, maybe they've gone up a bit, but nothing like that, 4 times. So the margin expansion for a business like Mina Tucano, when it's this big, is phenomenal. It's just phenomenal. Yeah.
Excellent, Jeremy. Thank you for taking us along there. I would love to actually ask a couple of questions about this slide still. I think it is very interesting for a potential investor to get that return on investment. Well, return of investment first and then a return on investment. Perhaps we can talk about what kind of cash flows we should be expecting in 2025, 2026, especially in comparison to your current pre-money valuation.
Yeah. Look, and let's start by saying this is obviously mining. There's always risk. Things happen, things get delayed. So I suggest every reader, viewer, if they want to be super conservative, halve our estimates for 25 to be super conservative. But you can see there, if you halve our number at 2,600 gold, we're still going to make 70 million clear profit US compared to the current valuation round of 60 million Canadian. Now, I remember when we did those slides with you, Stein and Lars, we said, there's no way gold's ever going to be at 2,600. And now that looks kind of conservative because we're now 2,740 or something, aren't we? I'm sure next year the average price received will probably be 3,000, in which case, we're looking at crazy profit in an environment where the currency is also very weak. I always say to my wife, Tucano Gold's either the number 9 bus or the private jet. But make no mistake, we'll never get a private jet, and we always travel economy. We keep our corporate costs super tight. As Max will know, we're very lean, we're very keen, but that's the sort of scale of this business. It is a really amazing business. When the price is strong, it makes extraordinary profit.
All right, and Jeremy, I think that was great, a great overview of the value proposition of Tucano Gold today. I would love to transition actually to growth, to future upside, because I believe Tucano Gold really has the potential to become a tier 1 mining asset in the future. That's my personal belief. I'm not putting words in your mouth. Perhaps you can quickly explain what the low-hanging fruit is for exploration, not next year, but maybe in the years after, where that true growth of value could be created.
Well, you've been there, both of you guys have spent a lot of time there. You've seen how big the system is. It runs for 14 kilometers. It's hard to get your head around it. And 7 of those kilometers have had almost no exploration. But it also has 5 walk-up targets just around the mill. But we also have 2,000 square kilometers of ground we've pegged. Well, we didn't peg it. The previous owners had it. That's never been explored. 2,000 square kilometers, I think that's almost the size of Holland. As a comparison, I'm not sure. Maybe Holland's a bit bigger, but it's a lot of ground, right? It's a lot of ground. We think it is the largest and best underexplored piece of Guiana Shield ground in South America. And it comes for free. It comes for free as part of the whole package of 60 million valuation. You can go to Suriname, and Lars, you were at Suriname recently. There's a group called Founders Metals that doesn't have any production, doesn't have any infrastructure, has put in about 5 holes, and they've got a market cap of 260 million. So it just shows you the potential of a re-rate for us. I think we're going to be a $1 billion company next year. And it doesn't need a crazy gold price to do that. Just on basic hard work, fundamentals, delivering quarter after quarter. And who knows, maybe we can pay a really big dividend.
All right, quick transition, I suppose, into those shareholder returns. It's a question I actually get often about Tucano Gold. As you are private, what are the plans for distributing returns to shareholders? Do you plan to remain private? Are there plans to go public? What do you plan to do to reward shareholders for taking the risk?
Yeah, look, we want to definitely list in Q1. Max is super focused on that right now. We are talking with 2 shells in Australia and 2 shells in Canada. And all of them are super keen. So I hope to have some news for everyone probably in the next 2 weeks on who we choose as our partner for listing, and then we'll just go for it. The Australian market, I got to say, is a lot more vibrant than Canada. I know Canada has definitely picked up the last couple of weeks, but it really was very quiet for the last 12 months, whereas the Australian market tends to get you much higher valuations for some reason, much bigger retail network, and I compared ourselves with 3 companies, Bellevue, Spartan, and one other. They have market caps of 800 to 1.5 billion. And there's no reason we can't be compared with those 3 companies in Australia. So I think Australia is going to be where Tucano lists, and that will give shareholders a massive, massive re-rating potential.
Very exciting. And perhaps we can talk about what kind of listing vehicle you would use there. You were hinting at a partner. I suppose you would be using a reverse merger then? Is that what we should be looking out for?
Exactly, yes. Well, I think it's called a reverse takeover, isn't it, Max? It's a reverse takeover. So there's a company, say, for example, it's got a listing already in Australia. It's got some cash in the business. It's probably got some dormant other assets that aren't getting recognized. We then merge the 2 together. We come up with a ratio. They put in some cash to really fast track the expansion of the business. They'll probably bring in some of their management because they've got now knowledge and expertise in the Australian stock market, and they know all the fund managers. So it's meant to be a really nice combination, a win-win transaction where you're complementing the skills. And we just want to be a $1 billion company, and there's absolutely everything pointing to that happening next year, in a strong market and really great assets. There's a great picture there. Yeah, you see that? That's 14 kilometers of ground that we have, and a lot of it hasn't even been touched.
I wanted to bring you back from shareholder returns to that upside string I wanted to pull, Jeremy. You hinted at the 14 kilometer system. We're looking at that banded iron formation. That's what the gold, I believe, is associated with. And we see a target actually called Duck Head, which is, of course, something we have to talk about in an overview video of Tucano Gold. Perhaps you can talk a bit about Duck Head, what it is, and what the low-hanging fruit there would also be. Again, not on the short term, but on the medium term.
Yeah, Duck Head's right at the bottom there on the right southeastern corner there. Duck Head in the red. Now that, interestingly enough, was the highest grading gold mine in the world for 3 years. And all of that ground running south, so if you go back northwest on that ground, none of it's been actually drilled for gold, but it's been drilled for iron ore and never tested for gold. So there's hundreds of thousands of meters in the core shed that have never tested for gold. and yet Duckhead was the highest grading gold mine in the world. And so there's so much potential to go back and retest all that iron ore exploration ground, that because this system is basically a big gold system surrounded by a huge iron ore mine. And we'll come on to that in a minute because we also have an iron ore business inside. So maybe show Duckhead. If you can show the Duckhead slides there, you can see just how high grade Duckhead was. There's a brilliant slide there, Stein, that shows the history. There you go. That's Duckhead, the old pit, and you can see that the mineralization that's still underneath the pit. But there's some unbelievable drill holes. One of my favorite things on a weekend is to pull up the old Beadle resource ASX announcements from 13, 14, 15, 16. And there you see drill holes that you don't see anymore. Like this, I think it's 31 meters at 490. 31 meters at 490. Importantly, with no nugget effect. So there's no visible gold in that core, which is really important because it means the gold hasn't been exaggerated by a nugget or hit in a Krugerrand or something like that. So this is extremely high grade. Maybe you can, on the next slide, you can see a picture of the pit before it was, there you go. On the right-hand side, that was the last month Duckhead was mined in 2016. They pulled out 20,000 ounces at 59 grams a ton in that little bottom part of the pit. 59, that's 2 ounces a ton. That's, what is that at today's price? That's over $5,000 a ton. And if a truck's carrying 30 tons, what's that? $150,000 per truckload. $150,000 a truckload of ore. That's on the left-hand side. That's a picture of what it looks like today. It's covered in water, which is a good thing, so no one is tempted to go down and try and dig out the super high grades. But we want to drill that, and we think this is going to be the highest grading gold mine again in the world. And when you've got a high grade mine, that's like that gives you the potential to become a $2, $3, $4 billion company in gold. Everyone loves high grade. Everyone wants to be a high grade producer. The minute you get high grade, you become a target from a Barrick and a Nico Eagle or some of the majors. So incredible piece of geology, very little drilling, and it's not even in our mine plan. This is not even in our mine plan for the next 5 years. Yeah, so the potential is out of this world. It's like having Lionel Messi retiring at the age of 21 and now wanting to have a comeback. But the beauty of mines is they don't age like footballers. They just stay young forever until you mine them again.
I think that's a great comparison, Jeremy. Thank you. And I think for me, that's really the story of Tucano. You have a lot of value baked into that current value proposition, that current mine plan, but there's so much low-hanging fruit that really could make this project tier 1. And before I actually confront you a bit on the risks associated to this project, perhaps we should talk about your iron ore business also for that overview for the generalist investor at home. What is it, and what should we expect from it?
It's really amazing business, and you can probably pull up some slides there. We didn't even know we bought it. It's embarrassing to say that, but we thought we bought a gold mine, and then when I first came after the initial closing, I said, "What's that?" They said, "Oh, that's an iron ore mill." And what does it do? Oh, that makes iron ore at 67 to 69% at a cash cost of $5. It's like, goodness me. And that has a capability of 500,000 tons a year, but we can expand that to 2 million tons. Now, 2 million tons a year at $5 cash cost. At today's price, I think iron ore is 100, but you get a premium for 67 of about 15, so $115. So it would make margins of $50 a ton. So at 2 million tons, you're looking at $100 million profit from a small mine like that, a small mill. And the reason it's so low cost is because the tailings from the gold are 40% iron content. But at the moment, they go straight through into the waste, into the tailings dam. But the tailings dam also has 10 million tons of recoverable iron ore as well. So that business is a gold mine in itself. It is, maybe you can show the slide of when it was producing, one or two more down, Lars. You can see the picture when it was producing. There you go, 10 years ago. And they had a cash cost then of $3.50 a ton. In China, to produce that product, that 67, is $100. Even Andrew Forrest from Fortescue rang me and said, "How the hell did you get that?" I said, "Andrew, come and invest." And he said, "It's too small for us." But his cash cost is $40. Ours is $5. So for his magnetite. So it's a really incredible business. That's part of the beauty of buying a big business where it comes with all sorts of things, including an iron ore mine operation that basically is the only gold mine in the world that has iron ore. It is the only one in the world. So it's really, it basically reduces your all-in sustaining cost for gold by probably $200 an ounce once it's up and running. So yeah, we're looking to reopen that probably in second quarter of 25. And we've had, Max and I have been talking to a numerous amount of different commodity trading houses. They all want to get the offtake. The steel mills are super excited because it's, we call it Tucano green iron. It's super green, comes from recycled product. It's the greenest, cleanest, lowest cost iron in the world.
Excellent overview, Jeremy. Thank you for that. And now that confrontation, like I promised, is going to happen. Let's talk about some of the tail sides, the risks. What is the debt profile of Tucano Gold? What should investors take into account when they invest in the company? What needs to be repaid?
Yeah, good question. So as part of the transaction, we bought the business from administration. We spent 14 months working on that with Alvarez and Marshall in Sao Paulo. We took on 400 creditors. We negotiated with them for 6 months. We owe them about 60 million US dollars, payable from years 4 to years 10. So the first payment will be in October 26. It's about 15 million US. So we have 2 years to make that payment to them. But there's all sorts of clauses that you can have various delays, but we won't delay. We have a real commitment to our creditors. But that's the only financial debt that the group has. There's no bank borrowings, there's no royalties. It's just we want to work with our creditors, our suppliers. We want to make them, we want to support them. And that's why Brazil is a fantastic system where their JR processes, which gives everyone a chance to recover some of their money, continue to work with us as partners, and have fantastic relationship long term. So yeah, that's the only outgoing that we need to commit ourselves to. But I mean, at these gold prices, it's quite a small number now.
Excellent. And what is your take on Brazil as a jurisdiction? You already started talking about bankruptcy laws, but what is it like as a jurisdiction for mining?
I think Brazil is the greatest country in the world. I've said that for a long time. I'm from Australia. Australia used to be the greatest country back when I was a kid. But then it got overrun by crazy politicians and bureaucracy, and it's expensive. You pay $45 for a pack of cigarettes in Australia. You go to Brazil, you pay $2. Everything in Brazil is straightforward. Everyone is great to work with. Everyone's pragmatic. They're there to do business. The mining laws in the state of Amapá are very straightforward. The government want us to succeed. We're going to be the biggest employer in the state of Amapá, right in the top of northern Brazil. It is the greatest country in the world. It's got so much opportunity, and with a weak currency, with fantastic workers working hard, very highly skilled, I could not think of a better place to run a gold mine in the world right now.
Excellent, great. And perhaps we can end off with two things. First, what you are most excited about, Jeremy, for 2025 for Tucano Gold. And second, Max, perhaps you can remind us how people can actually get in touch, how they can invest, and also what kind of the barrier of entry is for an investor who's interested to participate in Tucano Gold.
Yeah, well, Stein, the most exciting thing I'm looking forward to right now is getting that first gold pour. I just want to produce that first big shipment, maybe 2,000-3,000 ounces. Hear that helicopter take off on the way to Switzerland. I said to the team, we're going to have one hell of a party. We've waited longer than we thought, but this is going to be one hell of a night. And you and Lars are coming down. That to me is a really important time, that it will start then a process of confidence back in the business. Staff will get excited. Workers will want to join us. Talented people will call, and we will grow the business. And I said, if there was one tip I would say about property in Brazil, is the two towns that border our mine, they're probably going to be the best performing real estate markets in the whole of the country next year, because we're going to create a gold boom, a gold rush, and we're going to create wonderful employment for the state and bring back employment that people have been really wanting to happen. So I just want to take step by step, do the first gold pour, open up and expand and continue to grow and see where this exciting, wonderful business takes us. And that's why we brought Max on. Max has got such a great experience. He's got a Rolodex much bigger than ours. And it's time that as we get ready for public markets, we bring in professionals like Max to really tell the story in a much more professional way, to get it out there, because at the moment we're totally unknown. No one knows us because we're private, but I think we're going to be the most exciting new gold story in the market in 2025.
All right. Perhaps, Max, you can jump in with how a potential investor that's watching can reach out, how they can participate, and what kind of the barrier of entry is.
Of course, thanks very much. And I appreciate that we've got limited time here. So for anybody watching, I'd just like to emphasize the fact that we've given you just the highlights. We've got a couple of documents which investors will find interesting. One is a document which really summarizes the core points of the investor outlook, which is key. And the other is on our startup strategy, how we're planning to take the company from where we are now to 110, 120,000 ounces a year. All of that information can be made available through getting in contact through our website. In terms of barriers, there aren't really too many barriers to entry. We're looking for investors that are interested in investing 5,000 or more. So the threshold is quite low, and it means that anybody who's got an interest in gold or even having gold as part of their portfolio, we've got some very interesting information on how inexpensive our gold is in the ground compared to a lot of the other gold producers, showing the huge potential upside that we've got in the stock.
Excellent. Gentlemen, thank you so much for your time. Really appreciate it.
Thank you so
very
much.
much.
Looking forward to our first gold pour and having you guys on site.